can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sand. And right now, I feel like 100 grand.
You are listening to Inspired Insider with your host, Dr. Jeremy Wise.
Dr. Jeremy Wise here, founder of InspiredInsider.com, where I talk with inspirational entrepreneurs and leaders like the founders of P90X, Tony Horton, Baby Einstein founder, Julie Clark, Atari founder, and many, many more, and how they overcome big challenges in life and business. Today's episode, this is going to be a little bit different episode actually today. I had an amazing entrepreneur, and he actually invited me to interview him for his podcast, and it was so good. I said, can you please let me release this on mine? Today's episode is brought to you by Rise 25, which I co-founded with my business partner, John Corcoran. At Rise 25, we help B2B businesses connect to their Dream 100 clients and referral partners, and we help you run your podcast so it generates ROI. As people have listened, if you've listened to this before, podcasting is much more personal to me, and it was inspired by my grandfather, who was a Holocaust survivor, and him and his brother were concentration camps in Nazi Germany, and were the only members to survive. But his legacy lives on because the Holocaust Foundation did an interview with him, which you can watch on my About page. So yes, podcasting will help your business. It's been the best thing for my business and my life in general, but it helps you and your guests leave a legacy. So if you have questions, I believe any business should have a podcast. So if you have questions, you can email us, support@rise25media.com, or learn more, go to rise25.com. John and I made a video, and we even left in the outtakes. So now check out today's episode.
Ian Wyatt here. Welcome to the Daily Profit Show. These are certainly unusual times with everything going on with the coronavirus and the global spread of this pandemic and concerns about the impact on the global economy and the stock markets. I'm pleased to be here with you today to share some of my ideas in terms of how you can navigate this crisis and profit on the other side. With me today, I have Jeremy Wise. Jeremy has done thousands of interviews with successful entrepreneurs, investors, and CEOs. And today we flipped the script, and Jeremy is going to be interviewing me and leading our discussion about the coronavirus, what it means for the economy, and ultimately what it means for your portfolio. So Jeremy, thanks for being on the show with me today.
Ian, thank you. Thanks for having me. And, this is going to go far and wide, so I want to introduce you. If you don't know Ian and the work at Wyatt Investment Research, they've been doing it for the last almost 20 years, and he's been helping regular investors uncover hidden growth opportunities. And he's been actively investing for the last 30 years, and they share their lessons. And I think, I was telling Ian, we need to talk about this because I consider him one of the leaders in this field. And they have over 300,000 people that rely on the Wyatt Investment Research and the Daily Profit for their market insights and investment ideas, especially in these crazy turbulent times. So if you haven't checked out the Daily Profit and all the episodes, go to dailyprofit.com, sign up for Ian's free e-letter to get access to the top investment ideas and favorite growth sectors. So we have a lot to talk about. I guess where I want to start, Ian, is you're bunkered up. Talk about the state of affairs with you, your family, and then we can go into the broader economy and what people should actually do.
Yeah. So Jeremy, thanks again for being here. I'm working from home today. It is, it's Monday, and I'm working from home. We pulled our kids from school last week, so the schools are shutting down here in Vermont midweek. My wife and I decided we wanted to be a little bit proactive, so we actually pulled them out on Friday, and so they're at home being homeschooled. I have 4 little kids, so that they're being homeschooled. We're going for walks in the woods.
I was, I was reading, I think it was your email that said they're shutting down gatherings of 50 or more, and you're like, well, schools are still on.
Yeah. I saw this last night on CNN. And the headline was, CDC recommends no gatherings of more than 50 people except for schools or businesses. And I thought, how is it that, gatherings of 50 people in a bar or a club or a movie theater are bad, but if they're at school or working, it's perfectly safe. It seemed a little bit crazy to me. So, my kids are homeschooled right now. We've essentially shut down our office. All of my team members at Wyatt Research are working remotely. And, we're sort of laying low, but continuing business as usual. And so, after this podcast, I get to be the PE teacher for my 4 kids. We're going to go outside and play a little scrimmage game of soccer in the yard. So these are certainly interesting times. And, I believe that, this is a once in a century type of event. I actually started journaling about my experience here with my kids, because I think my kids and grandkids will someday perhaps appreciate a few insights from what life was like during the great pandemic of 2020.
So before we get into the economy, how are you navigating the kid stuff now that you have all the kids who are home and educating them?
Yeah, my wife spent most of the weekend putting together an educational plan for them for the week. So that's underway, and she's leading that. And I'm trying to be holed up in the office here. And hopefully we won't hear any kids in the background or dogs barking. But if we do, I hope you'll excuse us. So, things are good here on the home front. And, I think it really is important that younger, healthier people like us do our part to avoid the community transmission of coronavirus and avoid contributing to the impact for other people. Because it's not people like me and you who are going to be affected by this. It's folks who are older and at-risk demographics. And, I think it's a small part that we can play and responsibility that we have as a society.
So I was reading your email this morning, attention, President Trump closed down America. Do you want to just talk about that for a second?
Yeah. So, I think that, the situation here in the United States is becoming more and more dire, by the day. And, when you look at the numbers in terms of coronavirus cases here in the United States, the numbers are surging. The number doubled between Friday and today. So we are certainly ramping up. I think that the official number is right around 3,800 cases here in the United States as of the recording of this podcast. And, it's March 16th, I guess, Monday, March 16th. So 3,800. And, I saw an interview with a doctor and leading health professional from Johns Hopkins, who says he thinks right now, today in America, there's somewhere between 25,000 and 500,000 cases of COVID-19. We just haven't tested enough. And, when you look at what other countries where they've been successful in containing this, there are 2 examples. The first is China, and the second is South Korea. The 2 countries each took a different route to try to stop this. In China, they essentially, instituted martial law, shut down the entire economy, would not let people leave their houses for 4 to 6 weeks, and essentially they've crushed it. Coronavirus, there are cases there, but it's not spreading, and things are under control. South Korea took a different approach. They haven't gone into lockdown like they've done in China and like they're doing right now in Italy, Spain, and France. And instead, what the South Koreans decided to do was aggressively test for COVID-19. And so, in South Korea, the numbers are just crazy. I'm trying to pull them up right here, but I think they've tested over 200,000 people in South Korea for this, so that they can identify who has coronavirus, they can isolate them and keep them away from other people. And so when we think about where they are, they're aggressively testing. But let's put this in context. As of last week, South Korea had tested about 200,000 people. The United States had tested 2,000 people. Okay, we're a much bigger country, so we're behind. We're behind on both the testing, which hasn't happened, and we're behind on the containment, which also isn't happening. So, in my letter to President Trump, I recommended that the U.S. step it up on both fronts. That we need to ramp up the testing. There have been promises of millions of tests being made available. There were supposed to be 4 million tests available last week. I guarantee you that didn't happen. We're just not testing enough. And, I think this is much worse than most people believe right now. And if you want to see signs that the American people are starting to panic, just try to go to a Costco or go to your grocery store and try to buy bread or toilet paper. You'll be hard pressed to secure either of those items. So, I think the situation is bad. And, my recommendation is that the U.S. really should move into full lockdown today. We should do it now. We shouldn't wait. We know if we look at the cases in Italy, France, Spain, the writing's on the wall. The U.S. is going to have to shut down the economy. And what that means is no interstate travel, no airlines, every bar, restaurant, hair salon, every service business, 100% closed. And I think that's where things are moving very quickly. I was supposed to have a routine doctor's appointment this afternoon at the hospital. The doctor's office is at the hospital. Supposed to go in. I got a call from them this morning saying, do you have a health emergency? If not, don't come to the hospital. We don't want you to come in. Stay at home. Things are changing very, very rapidly. And we've never seen anything like this before.
Yeah. So what do you think is going to be the impact on, and we could talk about specifically stocks and other things later, but on the economy and what the government's going to have to do? Because, as you know, like small businesses or businesses may only have 60 days of cash flow, 30 days, 2 weeks for payroll. Yeah. And same thing with people in general. People are living paycheck to paycheck. If they are getting laid off or they're not being able to work because of this, what do you think the repercussions are going to be, or what do you think the government is going to have to do?
Yeah, I think to answer the first part of that question, I think the United States is heading towards a recession, without a doubt. The first quarter GDP numbers will show slower growth than last year, but I expect in the second quarter and third quarters of this year, you're going to have negative GDP growth. And, that's certainly going to reflect the decrease in activity. How deep it'll be, I think, is really a determination of, how long do things grind to a halt here in the United States? Is it 2 weeks? Is it a month? Is it 2 months? How long? And how bad does this get? And it's really hard to model that, but I would expect that we're going to see negative GDP growth. I think the small businesses are going to be the most hard hit with this because, as you said, if you're running a bakery or a restaurant or a hair salon, you don't have huge cash reserves. You don't have a ton of money on the balance sheet. You don't have deep-pocketed investors, and it's going to be tough. And, the government certainly wants to help. I think both Democrats and Republicans want to help the small business owner. I just wonder if they're going to be able to react fast enough because I don't see how the federal government is going to be able to help small businesses cover their payroll in 2 or 4 weeks.
Totally.
So people are going to be filing for unemployment. I know here in Vermont and other states are already starting to change the unemployment sort of regulations to make it easier for people to get unemployment. But I think it's going to be, big, really big. I think the U.S. government is going to do their best with the small businesses. I think, after what we saw in 2008, 2009, I think the federal government will do what it needs to save, the larger companies, airlines, cruise lines. I think the government's going to bail out anybody who needs it in terms of big companies. The Fed's already stepped up, lowering interest rates and, buying up over $700 billion of treasuries and mortgage-backed securities. But, this isn't a monetary, this is a medical issue. This is a health crisis, and lower interest rates don't solve the fact that people are scared to leave their houses, unwilling to travel, events are being canceled, and things are, grinding to a halt. The Federal Reserve can't fix that. What fixes that is addressing the underlying issue, which is a health crisis. And I think that, whether you're a Democrat or Republican, it really doesn't matter. I think the leadership that we've seen out of Washington has fallen short of expectations. And that's why the market's doing so poorly. And, the fact that the Federal Reserve is cutting interest rates and coming into the market and buying up securities, every time they've done that, the market crashes, okay? The market moves lower. And it's because people are saying, holy moly, if interest rates are being cut and if the Fed is doing this, things must be worse than we expected, okay? They're worse than we expected, so holy moly, so that it's certainly not helping matters.
So for people who don't haven't been following what's going on with the interest rates, take just a minute and tell people and how you think that will affect things.
Yeah, I mean, I think lower interest rates certainly will help things. And it certainly help if you want to refinance your home or borrow money. But again, that's not what's going to solve things here in the economy in the near term. I think that investors are rightfully worried that the market is weak. And I'm right now, the S&P 500 is trading around 2,500 or so as we record this. I believe that we could see the market move lower by another 20% from this level. I think we could see a range of 2,000 to 2,100 on the S&P 500 by the time it bottoms out, probably within a couple of weeks. And, the basis for that projection is, I think corporate earnings are going to take a big hit. And we'll see, earnings for the index of around $145 versus the price right now of $2,500. So, my projection is based on a 14 to 15 price to earnings multiple on the index, which is a historic norm. And again, this could go lower depending on how earnings come in and, how much appetite investors have to own stocks during this downturn. So, I think right now, I would be selling into market strength, not bargain buying right now. The market's falling like a knife. You don't want to try to catch a falling knife. Okay, let it hit the floor and bounce off. Which brings me to an interesting anecdote. I was talking last Friday with a friend of mine who's a financial advisor, and we were talking, and he shared with me that for one of his clients, told him he wanted to protect his portfolio, and so instead of selling his stocks and realizing capital gains and getting a big tax bill, he decided he'd simply short sell the S&P 500 index, right? The SPY, which is the biggest ETF in the world. And so he short sold. He was trying to short sell the S&P 500, but he couldn't do it. And the reason is that if you want to short sell a stock, right, which is a bet that the stock price is going to go down, you actually have to borrow it from someone else. You have to borrow the shares from someone else in your brokerage account, and then you sell them into the market, and then you buy them back later, ideally at a lower price. But what that tells me is, and again, he's a financial advisor at one of the biggest independent firms in the United States. Okay, this isn't a small firm. He couldn't find the shares. There were no shares available, which means 100% of the S&P 500 was short sold on Thursday. Okay, which means there are huge bets against the market. And so when we saw Friday's trading activity, this is what happened on Friday. You'll remember the market was up 2 or 3% for most of the day. And then the last hour of trading, the market surged to be up about 9% by the close. And, my theory on this is that essentially all of the short sellers who'd made a killing last week and the week before decided that going into the weekend, it wasn't worth it to have the trade on, because if the market if news improved, Federal Reserve does something, if the government, Congress does something, stocks could continue moving higher. They didn't want to have the risk going through the weekend. So they covered all their shorts, which is why the stock market roared higher at the end of the day Friday. But you know what? It's Monday morning and the market's back to normal and the stocks are down another 9%. So all those gains that we got on Friday are now gone again. We're back to where we were. So my point is just that, I think the market's going to be really volatile and we're going to see some real aberrations like this. Typical trading, you might see a 1 or 2% move in a day for the S&P 500. That'd be a big day. 1% move for the S&P 500 is a huge day. Okay. But we're seeing lots of days with 3%, 5%. 5% has become the norm. 10% is like, ooh, holy moly, that's a big move. So volatility is way, way up. And, it reminds me of the saying that, the stock market takes the stairs up, but it takes the elevator down. And that's certainly true. We're giving up years of gains in a few short days. So these are certainly challenging times for investors and certainly test the patience of investors who are in the market for the long term.
So I want to talk, about what should people do, and I wonder if we should group them into different categories of maybe there's someone right now who's literally ready to retire, and all their money is tied up and just hit a huge decrease, and then maybe there's someone who's at a certain age range where, they're maybe looking at more longer term things in the market, however you want to break it up. But what should, in these like volatile times, what should people do, and maybe in different segments that we're looking at?
Yeah, I think that for people who are younger, you're let's say you're in your 40s, you still have 25 years of working or more, you're going to be just fine. The coronavirus is going to come, it's going to go, and life will return to normal, and stock prices will too. This is a temporary setback on a road, on your path towards building wealth over the long term. For folks who are,
well, let's stick on that for a second. So 40s, is there anything they should do? Should they just not do anything? Should they be buying things, selling things? What should they be doing right now? So they don't freak out like they maybe are.
Yeah, I think that in the near term there's going to be more downside than upside. I think the market continues to have asymmetrical risk. There's greater opportunity for downside loss than there is upside potential. If more losses are going to give you financial concern, make it so that you can't sleep at night and you're worried, then I would suggest folks could take money off the table by moving money from stocks into fixed income or cash. Now, again, everybody's situation is different, right? And everybody's risk tolerance is different. And I'm not a financial advisor, and I can't give any personalized investment advice for folks under any circumstance, especially if I have no idea what their situation is. But, I think that, for people running a balanced portfolio, meaning a split between stocks and bonds, bonds provide some ballast during times of uncertainty. And so, what I would look to do in that situation would be to sell bonds once we get closer to a bottom and start buying stocks and increase my exposure to the equity markets. So, folks could look at doing that. And, personally, I've taken money off the table in my taxable investment accounts. And I've also moved to cash in my retirement account. Okay. I did both those moves a couple of weeks ago. Started getting really defensive, feeling like the market was on very shaky ground. There are no tax consequences of doing so in a 401k or, any type of retirement account. Obviously, if you have capital gains in your equity account, you're going to pay a tax bill if you're, selling winners to raise cash. So, the decision is a little bit harder with a taxable account. But, I think that we're going to see the market bottom here probably sooner rather than later. And we know that when it does, there will be, once in a decade opportunities for investors to buy investments that are trading at a deep, deep discount. The key thing is to make sure that you have the cash available and the willingness and the appetite to step up when things seem uncertain. You got to remember that the market will lead the economy. Okay, so the stock market isn't basing its price today based on the news today. The stock market's anticipating where coronavirus ends up. It's probably factoring in the fact that millions of Americans will get this. Hundreds of thousands will die, and the U.S. economy will take a big hit in a recession. Oil prices are also anticipating the same thing. You look at oil prices. I was reading data that showed, in the first 2 months of the year, 2.5 million barrels less of demand for oil globally than last year. 2.5 million barrels a day. Okay, oil went plunging from $45 to under 30. No, more than that. It's under $30 a barrel. So oil is getting crushed. Saudi Arabia, so on top of all this coronavirus stuff, we have oil price getting crushed, and Russia and Saudi Arabia deciding to get into an oil war where Saudi Arabia is essentially trying to put Russia out of business and put the U.S. fracking companies out of business. So we could do a whole nother show about how the recession and this bust in the oil price could spark a whole debt crisis in the United States that's akin to what we saw in 2008, 2009. It's just instead of individuals and homeowners, it's going to be corporations that have loaded up on debt for the last 10 years. So we could do a separate show on that and dig into that at greater length, because I think that you're going to see a huge, huge downgrade in the debt markets of a lot of big companies like Verizon and General Electric, tons of companies seeing their debt downgraded, and that could be sort of the next wave down of this bear market.
So for someone in their 40s who's, every situation is different, you're saying to not try and catch a falling knife situation?
Yeah, I wouldn't step up and be buying stocks right now. I think that what we want to do is, as an investor, I want to see things. I want to see a little bit more pain in the market. I haven't seen enough capitulation on the part of investors. Just throwing their hands up and saying I quit. Typically, that's when the market bottoms. Is when you're seeing, and you'll notice this just talking with friends. They'll say, "I'm out of the market. I got out of the market. I'm 100% in cash. I'm buying gold. Or just sort of giving up. Have you checked your stocks? No, I'm not even looking at the account." Okay. When that happens, when you see people saying, "I'm not even," when you hang out with someone, although nobody's having dinner parties, nobody's hanging out with friends these days, but when you hear people saying things like, I've just given up. I'm not checking my account statements. I'm not logging into my account. That shows capitulation, which is when things will bottom. I think we're a little ways away. I think the news flow on this is going to get worse, and quite a bit worse in the coming days. And I think most Americans aren't yet. I don't know. This is changing very rapidly. As of last week, most Americans didn't think this was going to be that bad. Today, folks are waking up to the fact that this is going to be real bad, and they're starting to realize that this is going to dramatically change their way of life for the coming weeks. And we're not used to that.
Oh, yeah.
We're not used to the government saying you can't go to a restaurant. You got to stay home. You can't get your hair cut. We're not used to it. And that's where we're headed.
It's unprecedented. We've never experienced something like this. I have a friend in another state who one of the teachers was tested positive for corona. So they quarantined this was before they shut down the schools. Now they've shut down all the schools, but this is before they did quarantine every single child, send them home. And then also because the parents were exposed, quarantine the whole family, so literally can't go out if they wanted to.
Yeah, we haven't seen something like this since the Spanish influenza in 1918. So it's been over 100 years. We probably won't see anything like this again in our lifetimes, thankfully. But it really is unprecedented. Now, so we've been sharing a lot of doom and gloom. I guess there can be a little bit of good news here, and the good news is that. Once the United States has this contained, things will start to improve with the financial markets. And so, one of the things that I was looking at was what's happened in China. And what we see is that the Chinese stock market dipped dramatically during the phase when, the number of cases in China were skyrocketing. And when this was clearly out of control, we saw, the stock market was crashing. And as soon as China got this contained, meaning no community spread, the numbers, instead of going up by thousands a day, were going up by 5 or 10 cases a day. What happened was the stock market rebounded within a matter of days and went right back to where it was before the market crashed, essentially almost all the way to new all-time highs. And since then, the Shanghai index has sold off again, along with everybody else, because it's clear that this isn't just a China story. This is a global story. So, the market's sold back off a little bit. But what I think that shows is that, investors in the market will view this as a black swan event, a once in a century event. And, the market's going to be volatile and fall in the near term. But once this gets under control, the markets should come back to where they were before. And, I think with, relative, speed too. So, I'm not suggesting there's going to be a V-shaped recovery, meaning it crash all the way down and then soar back up in 10 trading sessions or anything like that. I think it will be more like a U-shaped decline. So it's going to take a little bit of time, but, I think that the markets will be trading decidedly higher than these levels 12 months from now, I think will be, much higher than these levels. And again, investors who have cash will be well positioned to take advantage of the situation.
So right now, no one can determine, I guess, the exact time that people, let's say someone has an abundance of cash and they want to capitalize on this opportunity. What segments, I know you've been doing a lot of research on, different segments or things that people should look at that they should look at, I guess, investing in or.
Yeah, I think a couple ideas. We've been doing a lot of research into the biotech space and biotechnology stocks. We've seen some of these stocks, going up 20, 30, 40%. These are small and mid-cap companies that are working on coronavirus vaccines. So there's been a lot of excitement there. Biotech sector as a whole has held up better than the overall market. There certainly are some bright spots and companies there that we're looking at. So biotech is one area that I think is very interesting right now. And, the market for a vaccine is going to be absolutely huge. So, I think that's one area of excitement. Another area that I think will do well is gold. We have gold trading near, 6-7 year highs at this level. Again, it's sold off a little bit in the last week, but people have sold everything, the good, the bad, and the ugly. Everything sold off in the last week because there's been, a race to find liquidity. And, when people are looking to raise cash, they sell anything they can get rid of. So, I think that we've seen, a lot of uptick in interest in gold. I think gold mining stocks are particularly interesting. The sector has been bruised and beaten up for the last decade, really. And, gold is probably overdue to outperform anyways. But in times when the government is printing money, which is what's happening right now, and there's fear is everywhere. People look for safety and security. And let me tell you something: when people are looking for safety and security, they don't go and buy Ethereum or Bitcoin. Okay, they want to buy gold. Okay, or they want to hold U.S. dollars, or they want to hold U.S. Treasuries, even though the 10-year will pay you under 1%. So, I think that, if you think about the places where you can make money during a prolonged period of uncertainty, cash is king, bonds are rallying, and, gold is the number one safe haven in the entire world. So, I think that gold and gold stocks are a place that, most people are under allocated. They either own no gold or maybe a token, they have a couple $1,000s in a gold ETF like GLD. Historically though, people would have 5-10% of their portfolio in gold or gold stocks. So, I think that that's a trade that we'll see people moving into. And, one other thing related to gold is that, gold is, it takes a lot of energy to run mining operations. And oil prices just got knocked down, cut in half. So, the cost of operating a gold company also just fell dramatically. So we think there's some opportunities there.
There's two other categories. Last time we talked, Ian, is e-commerce, and we were talking about Amazon stock. And this was, I think we were talking in November or even before then of what would happen with Amazon stock. And actually before this whole coronavirus thing hit, what your research had shown was exactly on point. So if people had bought it when we had talked, they would have, it rose exactly to the point, where you said it was from the research. Where do you see things like Amazon or other e-commerce companies going now, that people are basically staying home and they're homebound?
Yeah, I think that companies like Amazon can continue to thrive in this environment. I think more and more people are buying things online. I don't know about you, but I ordered some soccer balls for my kids for our afternoon gym classes. So I ordered 4. We have 1 soccer ball now, but I was like, I need to get 4 if we're doing gym at home. So I bought 4 new ones, and Amazon Prime here is normally 2-day delivery. It's 4 days. Okay, Amazon's saying we're not going to deliver it in 2 days. We can't. So they're just getting flooded with orders. They can't keep up. Okay. But one of the things to remember is that we're simply probably shifting behavior, right? So, people are going to the grocery store and they're loading up. They're filling the cart now and filling the pantry, filling the freezer, but they're not going to buy later because they're going to use that stuff. They're just buying it up front. And so I think the same thing is probably happening in e-commerce, and we're probably seeing a shift, which means we'll have better results in the first quarter of the year and worse results in the second quarter. So, but if you look at stocks that have held up well, stocks like Costco have been doing phenomenally well. 2 weeks ago, my wife and I went to Costco. This was 2 weeks ago, to stock up our pantry and freezer, knowing that this was coming. And at the time, I asked the people at Costco, I said, how's business been? They said, it's been crazy, been nuts for the last week. I spoke with my parents who tried to go last week. They said they pulled in, they walked into the store. The line was from the front of the store to the back of the store. And so they left. They didn't even go in. They were like, forget about this. We'll do something else. So, companies like Costco, I think, are going to have a great quarter. The stock is holding up remarkably well. Costco is down, 5% from all-time highs. I think some companies are going to survive and do quite well. Others, Costco is probably seeing a shift. I sort of wonder, though, with companies like Amazon, if the federal government closes things down and locks things down, will Amazon be shut down? Is Amazon going to deliver? Is Amazon going to take your orders? And is UPS or are UPS and FedEx, are they going to keep delivering packages? I don't know. A week ago, I would have told you, yeah. I don't know. We know that in places like Italy, Spain, and France, grocery stores and pharmacies are remaining open during these, essential government lockdowns. In China, it was much more strict. But again, the Chinese government has an iron fist. They'll do whatever they want. I don't know if the same, locking people in their houses under military threat is going to fly here in the United States. I guess we'll see. But these are certainly uncertain times. And, I think that, obviously some companies are going to thrive. I think, in terms of a portfolio, I would look for companies that can deliver their services or products or take orders online. I look for companies that have a lot of cash on their balance sheets. Companies like Warren Buffett's Berkshire Hathaway should be uniquely positioned for this. Warren Buffett has about 60% of his entire portfolio in cash. They are ready to invest. They're open for business. And Warren Buffett says, Berkshire Hathaway will be a lender and investor of last resort for companies that need capital. And, Berkshire Hathaway was there in 2008, 2009 when nobody else had the cash or the conviction or willingness to write a check. Warren Buffett did, and really helped a lot of American companies weather that storm. And I know, personally, I'm a Berkshire Hathaway shareholder, and I think Berkshire is uniquely positioned to weather this storm. This is when Warren Buffett does the best, and this is when Berkshire thrives. So, as a Berkshire shareholder, I'm expecting that we'll see some pretty decent gains here in the coming couple of years.
Has he put out his advice in this situation?
Yeah, Warren Buffett, he'll always tell you, stocks for the long term, America is great and the economy will come back. And, he's right. If you look at over periods of, 10, 20 years, America has been a unique experiment with capitalism. And, the investors here have done incredibly well over the long term. That's going to continue after coronavirus and after we've all forgotten about this and thought, wow, that whole COVID-19 thing, wasn't that really weird for like a few months when we were locked in our houses and we couldn't go to work? And we're going to be like, wow, that's so odd. And Warren Buffett's right. I think the challenge is that, even if you understand that, there's a lot of pain in the near term. So, Warren Buffett will always tell you he's bullish on America. Stocks are going higher. The market's going to be good for you. Just be a long-term investor. And he's right. But if you really want to know what Buffett thinks about the market, what he thinks about stock prices, what you have to do is you have to look at what he's doing. Okay, you have to look at his behavior. Now, when at the end of last year, Berkshire Hathaway has, something like 60% of its entire investment portfolio in cash. Okay, not bonds, cash, U.S. dollars. what that tells you is Buffett thought stocks were overvalued, and he was waiting for an opportunity to buy stocks at the right price. And this is what Berkshire Hathaway has been waiting for. I would expect that we'll see some big deals with Buffett come out of this. We know that Berkshire Hathaway likes the airline industry and has been long airlines. We know that he likes the big banks in the financial sector. So I wouldn't be surprised to see Berkshire Hathaway step up in the airline business, with the financial sector, perhaps even cruise lines. Eventually, people will forget about this and start going on cruises again. So things will go back to business as usual. It's not going to happen overnight, but I think Berkshire Hathaway will be a winner coming out of this.
So Ian, what about for again, the scenario of bad timing? Someone is getting ready to retire, and they just took a huge hit on their nest egg.
Yeah. So I think that if you're just retired or getting ready to retire and you've just taken a big hit on your nest egg, well, hopefully someone in that situation wasn't 100% invested in stocks, because that would have been an irresponsible way to structure a portfolio if you were getting ready to retire. So let's hope that they were, at least 60% stocks, 40% bonds. So the bonds are providing some cushion here for the blow to equities. At that point, you haven't really realized the loss until you sell. So, selling now, I think, would be a big mistake. We were warning our clients early in this process, as early as February 27th, that we saw a lot of pain on the horizon and that stock prices were moving lower, not higher, and brace for impact. And so, folks who got out on February 27th probably accepted a 15% decline, which, nobody likes that, but it's a lot better than 30%, or, I don't know where we are right now, 30% down from the high. So they've been able to protect themselves a bit. And, but, I think if you haven't sold anything and you're retired or thinking about retiring in the near future, I think, ride this out. Selling into this right now, I think would be a mistake. And at this point, it's really hard to predict where the market's going in the short term. It's a coin flip. I don't know if stocks are going higher tomorrow or lower. I don't know exactly where the market's going in the near term. I think the market will move lower before it bottoms out. But again, if I'm wrong and stocks, bounce back and this is the low, you probably, if you cash out now, when are you going to jump back in? Are you going to jump back in after they go up 20%? I don't know. So, I think sort of staying the course is key. And, one other final piece of advice for someone in that situation is, just because you're retired doesn't mean that you need 100% of the capital. It's not like you retire and then you say, okay, give me all the cash in my 401k. I need it all tomorrow. That's not how it works. Most people draw out a small percentage of their retirement savings, throughout the duration of their retirement. And so while your balance may be showing a lower number now than it was 2 or 4 weeks ago, I think you got to remember, if you're 65 years old and your life expectancy is 85, you've got another 20 years to make that money work. You have 20 years during which the market is going to continue to rise, and stay the course. Don't let this derail you in the near term, and I think have confidence that America's been through a lot, and the world has been through a lot. World wars, revolutions, oil shocks, numerous crises, the Great Recession, the Great Depression, and we've come out on the other side, stronger and better able to deal with what the future is going to bring us. So, I think now, I think it is important to keep that frame of reference. This is not the only crisis the market's faced. It's not the only crisis the economy has faced. We have the smartest people working on testing and working on vaccines and a solution to this. This too will pass, and it's going to be painful in the near term, but 6 months, a year from now, I think things are going to be looking decidedly different. And investors who move 100% to the sidelines, stop following the market, stop being involved, are going to suffer. This is exactly what happened after 2008, 2009. The people who lost the most were those who sold at the low points. They sold out of the low points, and then they didn't return to the markets until 2015, 2016. They waited 5, 6, 8 years, 10 years to return to the market and start buying again, missing out on all the gains. So I think that's a bigger mistake to me, is if you go 100% to the sidelines, when do you get back in? And are you going to miss out?
So, I want to point people towards dailyprofit.com. Check out other episodes, also wyattresearch.com for your, they can subscribe and get your free e-newsletter. Any other final words that we should talk about with the economy, coronavirus, or anything else?
No, I think we've covered a lot of ground related to the recession and where we are with the market and where we think stocks are going in the near term versus in the long term. And, for most people listening, you're a long-term investor, you're not a short-term investor. So let's focus on the long term. And, stay the course, don't let this throw off your plan. And, I want you to be comfortable, want you to get through this and know that, we're going to face some challenges and negative headlines in the near term. But in the long term, America has the greatest economy in the world. We have the most innovative companies in the world. We have some of the hardest working people in the world and some of the best education systems in the world. And we're going to get through this too. So stay positive, even though we're all locked up at home trying to weather this storm.
I'll ask you in 3 days when you're locked up with 4 kids, how positive your nose.
All about it.
Thanks, Ian. I appreciate it.
Being here.
What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sailing right now. I'm feeling like 100 grand.